Welcome to the deep dive. Forget wading through dense financial reports.
Yeah, there's a lot out there.
Exactly. So today we're cutting straight to the chase on TCS's recent performance. Think of it as your shortcut to understanding what really matters with this tech giant right now.
That's the plan. You give us a great set of sources, official results, press releases, news articles that the crucial analysts call transcript.
Right.
Our mission really is to pull it all together. We'll focus on the US dollar earnings, headcount moves, their Gen AI strategy, how the macro picture is hitting them, and those key bits from the analyst Q&A.
Basically distilling it down.
Yep, extracting the core insights, giving you that clear picture without the overload.
Okay, let's get into it. Starting with the big financial numbers in U.S. dollars. For the whole fiscal year 25, TCS revenue reached $30.18 billion.
A big milestone, hitting that $30 billion mark.
It is, and that's up 3.8% compared to last year, or 4.2% if you look at constant currency.
Right, taking out those currency swings. And what's interesting is where some of that growth came from. Regional markets, for instance.
Huge growth there, wasn't it?
Massive, 37.2% year over year. That really points to maybe a successful diversification effort growing beyond their usual areas.
Makes sense. And there was also decent growth in energy, resources, and utilities.
Yeah, ERU up 5.1%, and manufacturing grew too by about 2.9%. So some steady movement in key sectors.
And then drilling down into just the last quarter, Q4 of FY25, revenue was $7.47 billion.
A bit more modest growth there year over year, 1.4%.
Or 2.5% in constant currency. But again, those strong spots showing up.
Exactly. Regional markets still strong, up 22.5% in the quarter, ERU up 4.6%, and even BFSI, that's banking and financial services,
The financial sector, yeah.
showed a 2.5% increase in Q4.
What about profitability? Margins holding up?
Pretty steady, actually. For the full year, operating margin was 24.3%, net margin 19.0%.
Okay.
And Q4 was almost identical, 24.2% operating, 19.0% net. So they seem to be managing costs effectively alongside that revenue.
That's crucial. And they're booking future work too, right? The
Yeah.
TCV numbers look strong.
Very strong. Total contract value for the whole year, $39.4 billion. And Q4 was a record breaker.
How much was Q4?
$12.2 billion just in Q4. That gave them a book-to-bill ratio of 1.6.
Wow, so booking 60% more than they billed in the quarter? That's...
Yeah, it really is. Plus, strong free cash flow for the year, $5.49 billion. And they returned a lot to shareholders, $5.26 billion in dividends. It paints a picture of, well, solid financial health.
Definitely. And they added more big clients too.
Yep, 2 more clients in that $100 million plus revenue category brings a total to 64. So attracting and keeping those major accounts.
Okay, let's shift that. Let's talk about their people, the workforce. End of FY25, they had just over 600,000 employees.
607,979, yeah. But the really interesting number is the net addition in Q4.
It was small, wasn't it?
Tiny, only 625 net new employees. That feels like a very cautious approach, maybe, focusing on optimization, automation. Reflects those economic headwinds we're seeing everywhere.
Yeah, one of their lowest quarterly adds in a while. And that caution seems reflected in pay decisions too. They delayed the usual annual wage hikes.
That's right. Normally it happens in April, but they pushed it back, citing the business environment.
Which analysts definitely picked up on.
Oh, yeah. A clear sign they're focused on managing costs right now, given all the global uncertainty. But it's important to note, they did go ahead with promotions as planned.
Okay, so career progression is still happening even if the general salary increase is on hold.
Exactly. Shows a commitment to advancement, just maybe tighter control on overall wage bills for now.
But despite that low Q4 hiring and the pay delay, they're still investing in new talent, right? The trainee numbers look significant.
They did. They onboarded 42,000 trainees in FY25, and they're planning similar, maybe even slightly higher numbers for FY26.
And a big focus on digital skills for those trainees.
A huge focus. 40% of the trainee intake is now geared towards digital skills. That's way up from 17% previously. And for experienced hires, the lateral ones, half of them are coming in with high-end skills, especially AI and Gen AI. So a real strategic push there.
Got it. And attrition, where does that stand?
IT services attrition, the LTM figure last 12 months is at 13.3%.
Okay. So investing in skills, particularly digital and AI, seems key, which leads us nicely into their Gen AI strategy.
It's clearly a massive focus area. The momentum around AI, and specifically Gen AI, seems to be really picking up across their client base.
They highlighted quite a few examples, didn't they? I saw something about a Gen AI movie script analyzer. That sounds different.
It does. It shows the breadth of application. But yeah, lots going on. They've partnered with Google Cloud to boost their AI capabilities.
Okay.
They're building AI models for a big North American utility using diverse data for things like vegetation management, predicting risks, and yes, that script analyzer for a major OTT player.
So it's not just about back office efficiency, it's creative applications too.
Exactly, but they are using it for efficiency as well, like using GenAI and their Mastercraft tool to migrate old COBOL code to Java for a big financial services client. That's a huge modernization task.
Definitely. And upgrades to their own platforms.
Yeah.
Wisdom Next, Chrysalis.
Yep. Wisdom Next gets agentic capabilities. TCS Interactive is branding around creative engineering powered by AI. Crystalis is getting AI baked in for enterprise solutions. They've even set up an agentic AI farm for cognitive operations.
Sounds advanced. And they got recognition too, an NVIDIA award.
Right. NVIDIA's Rising Star Partner for AI innovation. That's a pretty good validation. And they said over a third of client projects now use AI or Gen AI somehow to speed things up.
So it's becoming standard practice almost.
Increasingly, yeah.
Yep.
Their strategy seems twofold. AI for IT, using it internally for efficiency, and AI for business, which is the new revenue stream.
And the pipeline for that AI business is growing.
Apparently, yes. More deal wins in that space. Analyst surveys are rating them highly in AI, data, cloud. They're investing in industry-specific AI, unified platforms, responsible AI. It's a broad push.
You mentioned other examples too. AI assistance for energy audits.
Yeah, for a European energy company. And a unified supply chain insight tool using agentic AI for a U.S. biopharma company. It really feels like a core strategic bet for them.
Okay, so a major push on AI, but how is the wider economic picture affecting all this? The macroeconomic conditions.
Well, as we said, that caution in hiring, the delayed wage hikes, those are direct results of the challenging climate. Recession fears, global uncertainty, it's definitely impacting their planning.
They mentioned things got shaky towards the end of the fiscal year.
Yeah, late Feb, March, seeing more uncertainty, clients delaying decisions, pausing project starts, seems linked to worries about tariffs, general global instability.
And analysts agree. The TCS is kind of battened down the hatches a bit.
Pretty much. Focusing on optimizing operations, managing costs carefully, while the direct hit from, say, U.S. tariffs on Indian IT might be minimal right now.
It's the broader impact.
Exactly. The impact on client confidence, overall tech spending, that's the concern.
But TCS isn't entirely pessimistic. They expect things to improve.
He expressed some optimism, yeah. They seem to think this uncertainty might be short-lived and that FY26 could actually be better than FY25.
Based on what?
Based on that strong order book they've built up and ongoing client talks. But, it's conditional. It depends on the uncertainty actually easing off.
Right. And client budgets for this calendar year, flat.
That's the expectation. Stable, but with continued reshuffling of priorities rather than big spending increases.
So it's a balancing act. Strong backlog versus immediate caution.
Precisely. Confidence in the future tempered by present realities.
Okay, let's wrap up with some key takeaways from that analyst Q&A session that's always revealing.
Definitely. One point was about those Q4 margin impacts. They clarified the tactical interventions were mainly planned promotions.
Right, part of the normal cycle, hitting the margin by about 100 basis points sequentially.
Correct. And despite the current caution, management doubled down on their confidence for FY26, especially for the international business.
Why so confident?
2 good quarters of TCV back-to-back, and this belief that the current uncertainty is temporary, that clients will resume investing in transformation.
Makes sense. Did the mix of deals change much, like renewals versus new work?
Apparently not significantly compared to Q3. Not a big shift between cost-saving deals and discretionary spending either. The higher TCV was mostly just closing more deals overall.
And deal durations? Stable.
Stable at Q3 levels, yeah. Even though deal cycles had shortened a bit in Q3.
Okay. And just to be clear on pay, promotions happened, but the general FY26 wage hikes are deferred.
Correct. Decision on timing and amount later in the year, depending on how things look. Lateral hiring continues based on need, though.
Got it. What about the impact of AI on pricing? Could AI for IT lead to deflation?
TCS argued against that. They said productivity gains from AI can actually help them win larger deals, gain market share, leading to net more revenue, not less.
Interesting take. But potential margin headwinds still exist for FY26.
For sure. If uncertainty continues, that means lower operating leverage. And they might not get the same currency tailwind they got in FY25.
But the long-term goal is still that higher margin, around 26%.
That's still the aspiration, yeah. Through broad growth and efficiency levers, pyramid, productivity, realization.
And H-1B visas, still a factor.
Less so, they emphasize. Their global model reduces dependency, they hire everywhere, and apparently their recent H-1B success rates have been better anyway.
Final couple of points from the Q&A, AI, and client work.
The expectation now is that AI will be leveraged in most new projects, especially for boosting software engineering productivity, and those benefits are often shared with the client.
And visibility for Q1. How clear is the immediate future?
A bit less clear than entering Q1 last year, they admitted. But they are starting with those two strong PCV quarters, and again, the belief the current fog will lift relatively soon.
Right, so summing it all up then.
Yeah.
TCS crossed that big $30 billion revenue line.
Yeah.
That's significant.
Absolutely. But they're clearly in a phase of navigating macroeconomic turbulence. You see it in the cautious hiring, the delayed pay hikes.
Yeah, that strong focus on Gen AI, building that capability and pipeline, plus the solid order book, that provides optimism.
Definitely grounds for future optimism. But the near-term story is very much tied to how those wider economic conditions play out.
Which leads to a final thought maybe for our listeners to chew on. Given these delayed wage hikes and this intense focus on AI driving efficiency,
Yeah.
how might that combination